Today is Monday, November 18th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests. It should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS Senior Financial Economist. Steve, let's start with the grain markets this morning. Nearby soybean futures have dropped 50 cents from the October highs. Why, and will this decline continue?
I think it will continue because there's just a lot of uncertainty on the trade deal and whether it's going to be signed or not. And I think that South American weather is good right now, and so there really isn't any reason for the market to rally.
Nearby corn and wheat have also dropped from their October highs, 30 and 35 cents respectively. Tell us your thoughts on these markets.
Well, I think in the corn market, we just didn't get anything bullish on the November crop report, and the funds keep adding to their short positions because corn may not be included in any deal, and our export pace is really slow comparatively to what we need to keep prices up.
You briefly mentioned weather, Steve. What's the weather look like for both the U.S. and South American crops, and is it having any impact on prices?
Well, right now, both look to be better. I mean, for U.S., we should be able to get a lot of the crops harvested. The last 15% of the corn harvest might be dragged into January just because the crop is wet and there's not a lot of drying capacity right now. But I think the soybean crop will get harvested and put away. With the prices not rallying, we've seen a basis appreciate pretty dramatically. And I think that the basis will remain firm as we try to get grain into the pipeline where it's needed. South America and the other things are that outside markets influences, and with the stock market going up, money flow is heading into that market versus the grain market, and we really don't have a story right now for higher prices.
Anything new on the U.S. and China trade talks?
There's conflicting news. I mean, one time you hear some positive, next time you hear some negative. I just think right now the United States doesn't want to drop tariffs unless the Chinese agree to buy a certain amount of U.S. ag goods, and the Chinese don't want to be held to a certain shopping list. So it may be delayed until December 15th, the next time U.S. raises tariffs on China goods.
Alan, let's look at the financials. Why are there indications that the global economy is stabilizing despite no U.S.-China trade deal?
Well, it appears that it's the low interest rate environment that is finally doing its job, and that is to stimulate the global economy, and that is exactly what's happening. The economies around the world are stabilizing, at least to some degree, so it's the interest rate influence that is overriding all other factors and helping the global economy.
Yes, you stated previously that the central banks around the world would be slower to add more accommodation to the banking system. How do we trade the interest rate futures markets now?
Well, with that in mind, it implies that breakouts will probably fail in both directions in the interest rate futures markets. So anytime there's a chart breakout in one way or the other, I would expect that breakout to fail, especially in an environment where central banks are very inactive as far as additional accommodation.
Now, the stock market continues to make new highs. However, after advancing to new highs overnight, the S&P 500, Dow, and NASDAQ all gave back their gains. Why?
Well, basically, in the overnight trade, there was some optimism concerning a U.S.-China trade deal, and then that faded. So usually, we seem to get news one way or the other on trade. It's good news or bad news, but today we've got both. So the more pessimistic attitude more recently taking the stock index futures to about unchanged on a day. But overall, it's still the interest rate influence that will dominate and has dominated in spite of the ongoing problems between U.S. and China on trade. So I would expect prices to continue to advance for the indices through the balance of this year at least.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.